Happy weekend, everybody. My name's Steven, and I'm with Cannin, and we're here to teach you how to do technical analyses. Hopefully, you enjoyed this week's fundamental analysis. This week, we're looking at IIPR, Innovative Industrial Properties, and we're going to see this week when to get out of trades. So let's pop over to the pricing chart now. So you'll see we're looking at IIPR, again on the Hakanashi. This is listed on the NASDAQ exchange, so plenty of liquidity here. And it's been on a good kick for most of this year, from low 40s up to 60s, and now we're up into the hundreds, peaking at about 130, 135. So lots of nice opportunity to take profit here. But when do we actually get out of a trade? We spend a lot of time talking about when to get in a trade. When do we get out? So here we're looking at the chaikin oscillator as well as the awesome oscillator, and we've looked at these indicators a number of times before. This is the MACD of the accumulation distribution line, so you can see it's bullish signals once it crosses above the line above zero, and bearish when it crosses below. Similarly, the AO, the awesome oscillator, is a momentum indicator. This is just the difference between a 34 and a 5 period subtraction, but it's from not the pricing chart's ending point, it's from the midpoint actually. And similar trends here, above zero, bullish signal when it crosses below, bearish signal. So let's say we were in our trade, we entered after this horizontal period, somewhere during this big price increase from 84 up to 130 approximate dollars. All the while, our chaikin, which is a momentum indicator, is increasing to fairly high values until this point, and then it peaks, and then we get a slope change, and then it comes back down. If we would have waited all the way, perhaps we entered right here during this cross, if we would have waited until here, when we get that cross past zero again, that's a pretty good profit take. Look at that, 82 up to 134. What would have happened if we got out right when we saw that slope change, right at the peak here? Similar good trends, right? 129, 130. So that's a huge profit take had we entered that trade here. Similar entry point using the AO momentum indicator. Similar peak, it's slightly delayed, but then we get that slope change. Had we exited at the slope change, big profit. So two of our momentum indicators are really aligning with telling us when to take our profit. Had we waited until the awesome oscillator crossed its axes, we would have lost out on a lot of that profit. Now, 82 to 107, that's still a pretty nice take at profit. But hopefully this momentum indicator is really pointing at slope changes. So here we have positive slope, the peak is a zero slope, and then we have our negative slope. So take a look at slope changes as well as these momentum indicators on when to get out of trades. Here's a pretty nice example of two of them telling you when to take your profit. And this has replayed a lot of times with IIPR in particular. Look again here and scroll back to 2018, pretty interesting. So thanks for learning with us. Pay attention to Cannin.com and stay tuned for more technical analyses.